On November 30th, 2022, Treasury and IRS published guidance on the Inflation Reduction Act's prevailing wage and apprenticeship requirements. The publication of guidance on November 30th starts the 60-day period, meaning in order to receive increased incentives, taxpayers must meet the prevailing wage and apprenticeship requirements for facilities where construction begins on or after January 29, 2023. Welcome, my name is Mark Cooter. I'm a tax partner with Cherry Beckert and head of our real estate and construction practice. Ron Wainwright is with me, and we're going to talk a little bit about this prevailing wage and apprenticeship program and how to maximize the incentives that may be available for you and your project. This is the first podcast of 4 on the prevailing wage and apprenticeship requirements and challenges in compliance. So with that, Ron, maybe a quick brief introduction, and then we'll get started.
Great, Mark. Thank you. And thank you for our listeners today. So my name is Ron Wainwright. I'm a tax partner, a strategic tax partner with Cherry Beckert, and located in our Raleigh, North Carolina office. And I'm fortunate to work with Mark significantly with respect to our real estate and construction industry.
All right. So, Ron, can you give us a little bit more background on the context under the Inflation Reduction Act of 2022 and what we're kind of talking about here?
Great question, Mark. So, as we may know, or our listeners may know, on August 16th of 2022, President Biden signed into law the Inflation Reduction Act of 2022. And under the Inflation Reduction Act, taxpayers may receive increased tax benefits by meeting what are so-called the prevailing wage and apprenticeship requirements. So by statute, the prevailing wage and apprenticeship requirements generally apply to facilities where construction begins 60 days or more after the date you mentioned, Mark, of November 30th of 2022. From a tax policy perspective, when we look at the prevailing wage and apprenticeship requirements, a critical piece to providing what were referred to as good paying jobs underneath the Inflation Reduction Act is offering enhanced tax benefits for a range of clean energy provisions that were contained within the Inflation Reduction Act. It is by far our nation's largest investment in clean, green energy. And a lot of the prevailing wage as well as apprenticeship programs deal with energy efficiency deductions, specifically with respect to our real estate and construction industry. And so from a policy perspective, by pairing climate investments with the creation of good paying jobs, the Inflation Reduction Act is really an unparalleled investment to not only fight climate crisis, which will help improve job quality in clean energy industries, as well as in the real estate and construction industry. So a lot of focus on these provisions and the release or the initial guidance, as you highlighted, Mark, on November 30th of 22. And now we are post that January 29th magic date, and developers and real estate clients and companies need to be very focused on what is in this prevailing wage and apprenticeship requirements in the Internal Revenue Code.
So, Ron, what is the prevailing wage and how does the taxpayer go about satisfying the requirement?
Great question. And that is a question, as you know, Mark, we are receiving probably 10 to 15 times pre-January 29th, and now we'll receive more questions. And so what is the prevailing wage and how do you go about satisfying this requirement? You know, for purposes of complying with the prevailing wage provisions under IRA, the prevailing wage refers to the minimum wage rates that a taxpayer must ensure are paid to laborers and mechanics performing construction of a facility, a project, a property, even equipment with respect to that facility. And in some cases, even alterations or repairs. So a prevailing wage is the combination of the basic hourly wage rate and any fringe benefits rate, which are paid to a worker in a specific classification of laborer or mechanic in the area where that asset or where that construction, alteration, repair is being performed. And these are ultimately guidelines that come from the Secretary of Labor with respect to what's often referred to as the Davis-Bacon Act. And so in order to satisfy the prevailing wage provisions of the IR Act and really achieve these, quote, enhanced tax benefits, taxpayers must ensure that they and their contractors and subcontractors are documenting and substantiating the pay and fringe benefits are exceeding the prevailing wage rate. And that, again, is by job classification. So when we think about what the definition of a laborer and mechanic is, because that was a question, it really includes workers who perform primarily manual or physical work in trades or occupations such as electricians and iron workers and equipment operators and truck drivers and general laborers. So very broad category. And each of those specific examples I cited actually has a specific, quote, prevailing wage that you must exceed and document and substantiate. So an electrician is going to be different than an iron worker, who's going to be different from a truck driver, who's going to be different from an equipment operator. And so there's just a lot of new documentation and substantiation that is going to be required on the listeners of this podcast, specifically to achieve those enhanced tax benefits underneath not just the energy efficiency deduction or the multi-residential credit, which are probably the two that are most familiar with in the recon industry, but really a lot of the clean and green energy provisions in the IRA dealing with solar and microturbines and other types of alternative energy are impacted by this prevailing wage and quote apprenticeship program.
So in context of those requirements, what does construction and alteration and repair really mean? What are we looking at for that?
Well, it's a great question. And so I'd say there's still a little bit of uncertainty. The initial guidance that came out on November 30, as you mentioned, really brought us more questions than answers. But ultimately, construction, alteration, and repair means really all types of work done on the facility, including altering, remodeling, installation, painting, decorating, manufacturing of furnishings of materials that are in the asset or supplies and equipment on the site of the work, transportation between the taxpayer's facility and an off-site facility dedicated that construction. And so when we think about monitoring and substantiating that we're paying in excess of the prevailing wage based on that job type, we actually also have to break it down between, well, what exactly are we doing on that job site? Is it transportation between the taxpayer's facility and offsite facility? Is it painting and decorating, or is it remodeling and installation? So it's very, very broad, and it's also not limited to new construction or complete renovation of a facility. So construction, alteration, repair can include, as I mentioned, painting. Even painting mailboxes is an example that's been used, to installing modular furniture that is fixed in place in an office, to actually even replacing, cores and turbines in the event we were dealing with a microturbine or some form of a wind production facility or a hydroelectric facility. But ultimately, what we know today is the definition of construction, alteration, or repair applies based on the scope of the work that is to be performed on the facility or the asset that we are speaking of or building, or as we've talked about, constructing and repairing or maintaining. So it's a lot of grayness in what does construction, alteration, and repair mean. But technically, it really boils down to, well, what's the scope of the work on that facility, and the type of work that we're doing, and who is performing that work based on the labor or the mechanic attributable to that manual or physical labor. So a lot of documentation, a lot of substantiation, a lot of contemporaneous records look like they're going to have to be maintained to make sure you're, maximizing the IRA benefits of an energy efficiency deduction or a multi-residential credit.
So, given the guidance we do have, when does the taxpayer need to ensure that they pay the wages to qualify for the benefit?
Again, Mark, a great question. And so the IRA, or the Inflation Reduction Act, as well as a IRS notice that came out last year called 22-61, really identifies the circumstances under which a taxpayer has to ensure that prevailing wage or paid to laborers and mechanics. So ultimately, you want to qualify for the enhanced tax benefit. So a simple example is 179 Cap D, or what's referred to as the energy efficiency deduction, and that was a $1.88 per square foot for an asset that was placed in service prior to 12/31 of 22, but underneath the Inflation Reduction Act, coupled with the prevailing wage rate and an apprenticeship program. And we'll discuss an apprenticeship programs in a later podcast, but to exceed that prevailing weight, you want to do that because that $1.88 moves to $5 a square foot. So in looking at a facility of 100,000 square foot and being able to have that energy efficiency deduction at $188,000, when it moves to $5 per square foot, that's $500,000 of an additional deduction. So it's a game changer, but that's why the criticality, if you will, of ensuring that you're documenting substantiation with contemporaneous records in all of the areas that you're exceeding those prevailing wage rates that are ultimately paid to that laborer or that mechanic performing, again, that construction, that alteration, that repair, specifically on where that site is located and where that facility is located.
So, based on what you kind of gone over, Ron, can you confirm for our listeners kind of what types of facilities is this going to apply to and what they need to be on the lookout for?
Now, it's a great question because, again, this is one of these very broad provisions that came in within the Inflation Reduction Act, specifically to achieve those higher energy credits or deductions. And so, to your point, well, what type of facilities does this impact? Well, really, the construction, the alteration, the repair is, we've kind of talked in broad terms. And to receive those enhanced tax benefits are really any facility that produces electricity from certain renewable resources. So that could be a wind, a biomass, a geothermal, a solar. So if you're installing, as an example, a solar array on the top of your real estate asset on the roof, and you want to make sure that you're maximizing the credit, you're going to need to be paying attention to the prevailing wage in which you're paying your laborers and your installers. Really, it applies to also energy storage technologies, specifically in the recon, and what we see in our practice is really that energy efficient commercial building, which is that $5 per square foot now. They've increased the deduction from $1.88. So as you are, whether you're constructing the building or whether you're renovating the building or altering the building and you want to achieve that $5 per square foot, you're going to want to make sure that you're paying prevailing wage, and also, as we'll discuss later, including in your base of employees, the appropriate percentage of what are called apprenticeship programs. It's any dwelling also that meets certain Energy Star efficiency standards. It also is applicable to qualified nuclear power facilities, as well as any type of an alternative vehicle refueling property. So when you think about those EV stations and the construction and installation of those, also impacts clean hydrogen facilities as well as any type of a clean fuel production facility. So it's very broad when you think about, quote, the facilities that are going to need to be very detail oriented as they are either constructed or they're repaired or renovated to make sure that you're claiming the maximum amount of these, quote, energy deductions, being the energy efficient commercial building. But when we get into credits, also that now $5,000 credit on a residential unit where it was previously $2,000, that also moves to $5,000. But to achieve that $5,000 per unit in a multi-residential apartment complex, if you're building it or if you're renovating it or expanding it, you've got to meet and exceed the prevailing wage requirements. And so it's really almost any real estate asset that you can think of is going to be required if you were wanting to achieve those higher energy credits and deductions. You're going to need to exceed the prevailing wage as well as comply with the apprenticeship requirements.
So we've talked a lot about these requirements and sort of the properties that might apply to. Is there any guidance out there that's going to speak to what records are our clients and various taxpayers going to have to keep to document all this for the prevailing wage and apprenticeship provisions to make sure that they're met and that we don't have any problems meeting IRS requirements?
So again, that's where the rubber hits the road. And so the guidance that we do have in the income tax regulations to date, as well as the initial guidance that's been put out by the IRS, really provides that any person that is wanting to exceed the prevailing wage and the required apprenticeship requirements shall keep the records sufficient to establish, among other things, and I'm actually reading from the regs here, the amount of any credit or deduction claim. So that is actually the guidance. It's very broad, shall keep the records sufficient to establish, among other things, the amount of any credit or deduction claim. So ultimately, the taxpayer, in theory, would therefore need to keep records showing that all of the laborers and mechanics by job title and by function that they were performing have been paid the applicable prevailing wage rate for all of their hours worked to ensure that you have exceeded the requirements in the Inflation Reduction Act. And so we'll go through a simple example is that, the taxpayer could keep records that show the applicable wage determinations and then additional classifications and rates received. That would come from predominantly the Department of Labor. But then the taxpayer would have to identify all laborers and mechanics who perform construction work on the facility and ultimately reflect the correct classification of that work performed to those hours worked in each classification and the specific prevailing wage rate that was exceeded for that work performed. And that also includes any bona fide fringe benefit contributions or cost. And so as we discussed in an earlier question, you really have to first evaluate, well, what are the standards from the Department of Labor? And then ultimately, who are all my employees and what job functions are they performing? And exactly what are they performing in regards to constructing or renovating an asset? And then you also have to tie that employee to that job activity, to that specific prevailing wage, and their fringe benefits to ensure that you have exceeded those so that you're earning the maximum amount of the credit and or the deduction. So it's quite a matrix but to meet that simple definition of sufficient to establish the amount of any credit or deduction claims. There's a lot in that when you begin to unpack sufficient documentation to substantiate. So it's going to be a very complex matrix.
All right. Well, thank you, Ron, for this first part in a four-part series on this topic. And is there any other conclusions that you'd like to draw for our listeners today?
Yes, and thank you, Mark, for that opportunity. And what I would say is, in general, taxpayers that wish to take advantage of the enhanced clean energy tax benefits that are literally in the hundreds within the Inflation Reduction Act must ensure that all their laborers and mechanics are paid the applicable prevailing wage, including the fringe benefits. That's very important. For all of the hours performed during the construction or the renovation, or really any type of work, even repair work, from the standpoint of the repair that's being done on an asset or a facility. And as we discussed, a prevailing wage is really the combination of what's referred to as the basic hourly wage rate and any fringe benefits which are paid to a worker in a specific classification of a laborer or mechanic in the area where the construction, alteration, or repair is ultimately being performed. And so, for purposes of showing the compliance, I think for those listeners today, we wanted to make you aware of these compliance requirements, that you have to maintain the records that, again, are this sufficient to establish. And ultimately, Cherry Becker, stands ready to help and assist you. If it is a new construction project, or if it's a renovation, as well as really any type of repair or maintenance that is occurring in regards to an underlying asset that you might be owning and or building. So as we discussed, those records are voluminous, and they're certainly not limited to simply the items we talked about today around just identifying the applicable wage and identifying the labor and mechanic, but that underlying requirement is going to be, unfortunately, a labyrinth of a matrix, and Cherry Becker stands ready to help you and guide you forward in regards to the prevailing wage. And in another podcast, we'll talk about the apprenticeship requirements that you also must achieve and exceed.
All right. Well, thank you, listeners, for joining us today, and we look forward to hosting you in future podcasts.